Thank you, everybody, for joining us today for another Icon event. Today, we're hosting a cybersecurity fireside chat with Doug Song, Vice President and General Manager at Cisco Security, and John Brennan, partner at ventrues. For those of you who are first-timers at an Icon-hosted event, Icon is a nonprofit organization that helps Israeli entrepreneurs penetrate the U.S. market by bridging Silicon Valley and Israel. For more information, I'll attach our website and my personal profile here in the comments. And if you have any questions, feel free to talk to me later. Thank you so much and enjoy the session.
Thank you so much. So to kick things off, I'll introduce myself. My name is John Brennan. I'm a partner with Ventures. We are seed stage investors in Israeli cybersecurity teams. That's the only space in which we invest. We're currently investing out of our fourth fund, $135 million vehicle, YLV4. And I want to start off a little bit here by thanking a few people. First of all, I want to thank Icon just for continuing to host really high quality, amazing virtual events despite an ongoing pandemic. I think it's really a testament to the team at Icon that we've been able to continue to do things like this. I also want to thank our co-sponsors and good friends at GGV for helping to put this together. And last but certainly not least, I want to thank Doug for joining us here. Doug, the co-founder and CEO of Duo Security, now general manager at Cisco. It's great to have you here today.
Great. Thank you, John.
Great. So I want to just a technical note. We put together some great questions. So we've got plenty of material for Doug to chat about today, but I do encourage anyone watching to submit via either the comments or private chat boxes on the right. So if anyone wants to submit questions, I promise we will get to as many of those as we can as we go through the conversation. And to kick things off, I'm going to ask Doug introduce himself and tell the audience a little bit about what he's all about.
All right, so I'm Doug Song. I'm co-founder, former CEO, now general manager of Duo at Cisco. And 10 years ago, we started this company based here in Ann Arbor, Michigan. So not in the Valley, not on the East Coast, but here in Michigan, about as close to Canada before it becomes Canada. And we grew that company from myself, my co-founder John Oberheide, to almost 800 people. And by now we're over that within Cisco. And we elected to take a $2.5 billion or $2.35 billion acquisition offer from Cisco versus IPO, which would have otherwise been our path. And so that's been my journey most recently. But before that, I also had started some other companies, a company called Arbor Networks back in 2000. That was actually also a Cisco investment back in those days. And we ended up selling that company for about a $250 million. And so I've had a history in security, keep doing security companies. I don't know if the next one will be 25 billion, but maybe that'd be a nice trend to keep adding zeros to the end of all those kind of outcomes. But yeah, so far it's been a wonderful journey here at Cisco. We've been working to build a much bigger opportunity in the industry than what we had within Duo proper. So happy to chat about that or anything in between.
Sounds great, Doug. Thank you so much for that introduction. So I am going to start off with a bit of an obligatory question, but I think it's important and continues to be relevant for our audience. I think people would love to hear, what challenges did Duo face during this pandemic, and how have you overcome some of those key challenges?
It's ironic, but at a time where I think a lot of the global economy was really struggling to stay in business, our business was actually doing really quite well. In fact, one of the discussions we had with our team was that, what we do in helping enable secure access for customers was helping to keep these other businesses in business. But what we saw very quickly, through the early days of the pandemic was a pretty drastic acceleration. I think we saw our leads triple within a month. And it was a pretty steep ramp to try to address the needs of all those customers. And if you know anything about our company, it's a little bit interesting. And Duo is a company that sells both to the high end of the market, the largest and most sophisticated buyers in security, as well as some of the smallest and least sophisticated. So we have a very, very long tail of SMB buyers. And, we primarily saw the growth on the low end of the market. Lots and lots of small businesses trying to quickly retool themselves to be able to operate online. And I think the stat in the US anyway was that, what was typically 5 to 10% of organizations that were enabled for remote work quickly became upwards of 70%, right, through the course of the pandemic. And so, um, a lot of our efforts were primarily focused on how we built out our service to scale. There's a lot of focus on SRE, site reliability engineering, scaling, as well as a lot of infrastructure with Cisco and kind of building out with them some joint offers that we could deliver to enable customers to get up to speed quickly on remote access. But those are kind of the specific things that we dealt with, for business at scale.
That's great. And, I think we've seen a lot of the same, both in our portfolio and outside of our portfolio. This market has given some tailwinds to the cybersecurity space. Do you think, being in cybersecurity, have you had any unique challenges amidst COVID versus some other companies in other spaces, because you're in cybersecurity? So yes, demand is up. There's a lot of opportunity and need in the customer side. Did you feel any other challenges you had to overcome because of your focus?
Yeah, I think one thing that definitely accelerated for our business was, but it comes along with the geographic expansion via Cisco, where the number of companies in which we're operating and making sure that we could actually address those needs, which are evolving in terms of data governance and compliance successfully. And so we went from primarily operating in the U.S. Pre-acquisition with a bit of business in Europe. Though the platform was open for customers all around the world, to now we're operating via Cisco in hundreds of countries, and so quickly we've go beyond a lot of the U.S. based compliance frameworks like SOC 2, obviously, or FedRAMP, specifically for the federal government, to things like ISO 27001, and making sure again that we we frame that compliance program we have toward the needs specifically in Europe and again the rest of the world. You think about Japan, think about we're still working on Russia. There's a lot of business out there to figure out how to solve for, and so that's something that again I think we had to quickly get up to speed on. How would we accelerate our global operation? And so for, I think, security companies, a lot of folks are seeing probably something similar, where more and more the global market for security is very, very broad, but it's also becoming more complex.
Mm-hmm.
As we see these policies and these, whether it be data governance, privacy, all become a little bit more regional, right, than they used to be.
Absolutely. And, it's fascinating to hear you say that. We're having these conversations with our portfolio companies before they even raise a Series A, just thinking ahead towards things, everything from SOC 2 to FedRAMP, and thinking about the different pieces of the puzzle they have to think about, and decisions they make early on that will have an effect, when hopefully they someday get to the scale of Duo. So I wanted to ask, and this is specific for our crowd here of Israeli cybersecurity entrepreneurs. So you're in Michigan, so it's not quite Tel Aviv to SFO, but you're not necessarily where a lot of other companies are, a lot of talent is, and we're now seeing a lot of work from home. So what is your advice, and what insights do you have from your experience starting in Michigan and growing the company in Michigan, for Israeli founders thinking about how to build a workforce that is going to have go-to-market, most likely in the U.S., a R&D team in Israel, and many people on both of those teams, at least for the foreseeable future, working from home?
I don't know if the situation for us in Michigan was necessarily that different than, at least the benefit you have in Israel is that there is a well-known cybersecurity cluster there, right? In Michigan, we might as well be in Siberia from the point of view of a lot of investors, who would otherwise call the entire sort of middle of the country flyover sort of country. And so we did kind of pursue a similar structure. Our go-to-market functions are headquartered typically, my head of global sales is in California. Head of marketing is actually in Chicago. And all of our product and R&D is actually split between Ann Arbor, Michigan and Austin, Texas. And so we are a distributed operation, have been, since their very earliest days. I think that's part of the operating model that businesses like ours, based in Michigan or probably based in Israel, we'll need to think about from the very earliest days. How do you build a distributed team? How do you build a distributed culture? How do you also be clear on delegation and accountability? Because this is one thing I see a lot of startups fail, no matter where they are. But it's even more complicated, right? When you don't have people in the same office and that high quality communication that happens by default. How do you let great leaders lead, but be very clear on accountability? Agreeing on what's to be done, agreeing on how they'll be supported, agreeing how successful will be measured. And so a lot of those basic management practices, are actually really critical, more critical, I think, when you have a management team that's actually divided between these different locations. And so actually, as a bit of advice, for founders in Israel, there is a great book. I very ever recommend any business books because mostly it's one idea and 300 pages. But there's a book that I wish had existed back when we started Duo, and it didn't until probably year 8. But it's called High Growth Handbook by Gill. It's an amazing book. Covers a lot of topics from the perspective of a lot of very successful high growth founders who've taken their businesses through a mode of hyperscale and hypergrowth. And that, I think, is sort of the challenge, right? Figuring out how to do that when you don't have this sort of visibility and sort of the convenience of having all those folks within kind of one roof, under one roof. There's another book also that I think may be relevant, maybe as a kind of guide to sort of U.S. sort of operations and expectations, which is called Acceleration by Ryan Roberts, who's a startup lawyer. But there's a lot around the kind of legal and operational frameworks of U.S. A U.S. corporation and expectations around how things like equity and all these other things kind of work. That I think that it's just a good sort of primer, right, for folks to get up to speed quickly on all the nuances of those kinds of things when you're dealing with a U.S. operation. But at any rate, I always said that we didn't need to be in Silicon Valley, but we did need to have a little bit of Silicon Valley in us. And so when it came to setting the company up and figuring out how we'd actually compose the right board and set of investors to help advise us, we were very intentional about that, making sure, again, we found folks who had an experience working with companies that weren't necessarily headquartered in the Valley and whose networks would actually help be the bridge, right, for us into these other talent markets that we would need to go after. And so, at any rate, you have a choice to make, and when every investment you take, with every board seat you fill, and so you can, my best advice is to make sure that you have sort of the right folks who've been through a journey thinking about how to build a global business with you, right, even early, to make sure that you set up correctly for that from the earliest time possible.
That's great, and anyone on my team will tell you that I love book recommendations. I've read the former, I have not read the latter, and I'll be ordering it shortly to check it out. And you mentioned something interesting here. So you talked a little bit about frameworks. I think we've seen, and maybe this is correlated with the current environment, I think we've seen some of our portfolio companies adopt things like OKRs, objectives and key results, earlier than we've seen in the past. I'm curious if that's something you recommend, founders or maybe even potential founders. What kind of advice do you have for them on adopting those kind of frameworks that can sometimes seem like a lot of overhead, but in my opinion, at least, and we use them at Wild Ventures, can really help align across geographies and offices?
Yeah, there's nothing magic about OKRs or any other kind of framework V2 Mom, your Salesforce, or any of those kinds of frameworks for management. It's just it's more about the quality of thinking that drives in the process. It puts you and your team through to really focus on what matters, because the biggest risk to a startup that has few resources, like Duo. I know ultimately we raised 119 million. We barely spent any of it, really. We spent 14 of it to get to 100 million in ARR, ultimately 40 to get to 200. So we're very capital efficient. But along the way, the reason why we were so successful is because we weren't better resources, we weren't smarter, we didn't work harder, but we did learn more quickly what actually mattered. And there's a process sort of around how you operationalize OKRs, focusing like the 3 to 5 most important things to do, making sure you have measures and metrics, so you know whether that's been successful or not, and having the discipline along the way to figure out like what's working, what's not, and hopefully a culture that supports that learning. The most important part that comes along with OKRs and a management process like that, in my opinion, is a commitment to building a learning organization where failure is actually acceptable. At Duo, we say we win or we learn. The thing you never want to have people sort of end up with is in a situation where they're afraid to tell you that something isn't working or that something is going wrong. That is a surefire way to destroy an organization. You need bad news early. In a lot of ways, management is the art of no surprises. And so you have to build a culture that corresponds to that, where you look and you try to debug that execution together. And it's never about who's right, but about what's right and what's working or not. So again, OKR is just a way to make sure you drive the simplicity around like pick 3, right? And for me, as a CEO, I feel like half my job was just very reductive, right? Getting everything, all the world of possible things we could do to like 3 things, because that's about as many. I can only count on 3 fingers, really. But just repeating those things over and over again, making sure again that we're focused on delivering them. Again, I think it's really, really important that you build a high performing organization that's really focused on execution. The strategy is, was it the old Peter Drucker saying, execution eats strategy for breakfast or whatever? But it's true, like strategy is about making choices. You have many choices to make right through the course of your business. Not all of them will be right. What's most important is that the ones, how do you make the right choices to be successful? You make a bunch of wrong ones, right? You learn from them, right? And keep going. And again, I strongly encourage folks to have some sort of formal framework of commitment and review, right? For how folks execute their business early. Build that muscle early, because it's you might never get there if you don't. So.
Exactly, and I'm a big supporter as well. I think build that muscle early is certainly good advice, and it's kind of like an ounce of prevention is worth a pound of pain, and I think that is really true in this case. I'd like to shift gears a little bit, and basically I'd like to ask some questions that go through the growth cycle of a startup. So I'm going to start a little bit earlier, and then actually I'm curious as to some of your thoughts around growth. But one topic we talk with our companies quite a bit about is how to balance different priorities within a pipeline. So of course you've got product that's being built, a lot of conflicting priorities, almost by definition, very constrained bandwidth. And what we sometimes see is a struggle to balance large customers, amazing logos, global customers that could result in very large annual recurring revenue deals, versus smaller, maybe more attainable customers, which are larger in volume, shorter sales cycles. But again, maybe they don't impress a Series A or Series B investor as some of the large logos. What advice do you have for founders? And in most cases, it's the CEO at this early stage. What advice do you have for founders thinking about that balance and making those critical decisions? Again, thinking about acting early and making these decisions earlier rather than later.
That is. There are many ways to be successful. So I'll never prescribe sort of one way that I think everybody needs to think about this stuff. But what I'd say is that it is the CEO's job to figure out what what is sort of the shape of this movie or the story that you're sort of writing together, right? Is it going to be mostly focused on market with large deals and very unpredictable sort of pipeline as a result? Will it be down market with more of an inbound model? Will it be a mix? Early stage of Duo, we didn't know. We didn't know either. We had lots of groping around in the dark, trying to figure out what we should be doing, but lots of experimentation. And so in the earliest days, trying to find, not just product market fit, but even, and not even necessarily, it is sort of a form of customer discovery, trying to figure out, well, who do we want to serve and why? Where's the easy sledding going to be in terms of which segments we serve, maybe in what verticals, maybe even what geos. But it's very unpredictable, right? Early in a startup, you're all building. There's a lot of rapid change. The job is really just to make sure that every action has it has a process by which you're understanding, like 2 weeks later, did it work? Did it not? Are we doubling down? Are we going to cut bait? But you have to have sort of the discipline, sort of continually might make forward progress toward writing that story. So what happened with Duo was, we weren't sure, but we weren't sure of where we'd end up. But what I knew is that early we weren't going to go compete, for instance, against RSA, the big 800-pound or $800 million gorilla in our space, given their almost 3 decades, right, in business, owning that market and their huge channel. And so we thought we would segment away from them, right? Go after the mid market, go after the underserved market, right? Of customers, for instance, in healthcare, finance and so forth, that all had the same need as their bigger, counterparts, but maybe didn't have all the resources, the human resources, right, as much as the financial resources to go and solve security in that way. And so we wanted to simplify the solution, maybe deliver 80%, right, of the feature set and value of what the big companies had, but for a different market, and with a high differentiated go-to-market motion where they could find us mostly online. And so we did a lot of testing of that, taking out a bunch of different AdWords, like $5 a day can buy you. It's a small number of keywords you can go and test. Getting you to landing pages where you have maybe a slightly different sort of message or positioning. Sign up to hear more, and you call all those customers and find out why did they sign up, what were they looking for, what's a positive business outcome they're seeking, and looking for this kind of security solution. But we spent a lot of time doing that to find ways that we could find routes to market, right, that would work for us. It ended up being that we ended up kind of 50-50, 50-50 SMB and mid-market, companies. SMB for us was up to 500 employees, mid-market was up to 5,000 employees. And then 50% of the business enterprise, right? Companies over 5,000 employees. And the lower half was all highly predictable, high volume, high velocity. We built a really highly engineered inbound motion, starting with technical inbound marketing and all this, the HubSpot calls inbound marketing these days, content marketing and demand gen. And then up market, a strategy that was somewhat more verticalized. At the end, we ended up being successful in a number of kind of key verticals, healthcare being an interesting one, where we started to figure out ways to go shoot fish in a barrel, right? So, for instance, like another one we did was higher ed amongst all the large universities, which again was a little bit of a surprising buyer for technology like two-factor, but via consortiums like Internet2, right, which runs the REN ISAC, the research network ISAC for all those instant sharing analysis centers for all those organizations, or just like there's a FS ISAC for the financial services industry, the big banks, just like there's a MS ISAC, the multi-state kind of ISAC for all the 50 state CIOs. There are these communities that you can go after and sort of hit all at once, just like you show up at HIMSS, right, the big healthcare conference, and meet a bunch of healthcare folks together. But we had very different strategies that were all segment specific. And what was most important as a CEO and leadership team was to make sure that we understood what was in startup, growth, or scale mode, right?
Mm-hmm.
The different parts of your business that will be more mature than others, and that will also be more predictable, right, than others. And a lot of the job is to build that model, build a financial model, where you understand what that looks like, and you build repeatable growth. For us, at the end of the day, there's no scale without repetition, right? And so we had to, and it starts with like people, and then pipeline, and then bookings. But we had to understand, well, what sort of activities lead to the acceleration of the pipeline that will then lead to the bookings and the regular achievement, right, of results in those areas. And we called that engineering the business. And that was actually our very first, and still is our first corporate value, to engineer the business. I'm an engineer by training, as is my co-founder, my CTO. But in this organization versus like the companies I did prior, my focus was engineering the business. My co-founder was engineering the product, right? And so a large part of that was really trying to figure out, again, what are those elements? Because moving things from startup to growth to scale requires all sorts of operational and organizational change to go from builders to improvers to operators, rapid change, iterative change, controlled change, being unpredictable to some predictability to being highly predictable. And, just like in anything else, like when you're early startup, you're wearing all the hats. When you're growing, you're forming the roles, and at scale, you're trying to take the hats off as fast as possible, trying to make sure, someone else has them. Those are the kinds of organizational challenge and development I think CEOs have to lead through, and it's an intersection, right, of strategy, execution, as well as kind of the design, right, design of how you'll reshape and restructure all parts of your organization, like your communication design, your people platform, and all that kind of stuff. So anyway, so it's a very broad problem. I know it's a kind of pretty broad answer, but that's sort of the journey I think you're on if you'd be successful.
Yeah, thank you for that. And I think you mentioned customer discovery in there, and that's something we focus on so intensely at Wild Ventures. We invest before there's even a product, and so our advice tends to be speak to as many customers as possible, including the ones you don't think that will like what you do. But then very quickly, the conversation shifts to better qualifying leads, improving systems and processes, because it really is two very different processes. And what's good at one stage is not necessarily very effective at the later stages, especially when efficiency is so important.
Yeah, I think what's important, even when you're experimenting, is to have a hypothesis, right? I mean, just like any scientific method in general, right? Have some sort of hypothesis about what you're trying to figure out, right? By doing something, and measure whether you achieved it or not. And where you've got to elevate and standardize that behavior, right? So we had that a lot across our entire team, where someone on the inside sales team or an ADR team might have come up with some even very tactical kind of thing, like, well, here's the questions I asked to kind of qualify these deals, or here's the signal I'm seeing, right, of what our ideal customer profile is becoming, right, in this sort of market. We work to elevate and standardize that, and if it was good enough for one rep, we try across like 4, 10, and see if that really worked. By the end of the day, it leads to, again, an opportunity to model a business and start to set expectations. Like, we did end up taking on some large deals, and we do, we do, $1 million plus deals regularly now. But we didn't early, and it took a lot of effort to figure out how and where we would actually, go after that in a way that wouldn't be regrettable. So that's the other thing I'd say. One thing I would caution early stage companies around that kind of big elephant hunting is that sometimes the elephant will kill you, right? Like when they did Arbor Networks, we were selling to the large global service providers, and there you end up building like an AT&T product, or a British Telecom product, or a France Telecom product, or what have you. And it's not necessarily repeatable. There's also long sales cycles, right? It can be 18, 24 months, right, to get a really meaningful deal done with those kinds of customers. In the meantime, you're sort of starving, and so there were some really important decisions we made early in the company not to take what I call low quality revenue. If we weren't going to learn something from it and wasn't going to be repeatable, and early we made the decision, for instance, not to do any on-premise software. It was all going to be cloud, but we didn't start the company with that notion. We had even a very, very significant early deal that would have been over $1 million, and it took a lot of. It was a very hard decision to make, but we turned it down at the end of the day, with the support of a board member, which is important. So they're not asking kind of questions, they're not aligned to what you're doing with the company. But in fact, it was Stratton Sklavos, former CEO of Verisign, who was on my board, who when we were building this on-premise product as a proof of concept for this customer, and I came to him sheepishly saying, "Hey, Stratton, I don't think we should be doing this. I'm really conflicted, and they want to put Duo in a box, and they won't buy otherwise. They're a big bank, and they say they're regulators and all this." And he said, "Well, Doug, the last person who told me that same sob story was Mark Benioff, sitting in the same chair where he said, they want to put Salesforce in a box." And he told me the same advice he gave him back then, which was be on the right side of history. You started a company with a thesis around what kind of value you're delivering and why. Stick to it, because customers aren't always right. They do have needs, but it's your job to figure out how to deliver best to them, and it may not be what customers think they are. And And so again, we ended up making a decision to stay 100% cloud. Um, and it might take longer, because to build a subscription business, everyone forgets that
Hmm.
in that kind of hockey stick of growth, that there's a long flat part of the hockey stick. That's all that figuring out how to build those cohorts that compound right over time. But in those early days, you have to make it up from a lot of small deals. And our ASPs went from being like four figures, like under $10,000 deals to barely, sort of $10,000, $12,000 to $30,000, and kept growing. But um, our average sales price, the deals were kept growing in size, but it takes time. It takes time to build that and build your brand. Build all the trust that customers will have in you as a vendor to do that. Um, and so that's my biggest suggestion, because I think a lot of security companies can find a path to about 10 million, I think, in ARR without really doing that. If they go after big enterprise customers like banks, right, who are willing to experiment, and banks are notorious for this. They'll take all kinds of chances on small startup vendors in security, but it won't be repeatable.
Hmm.
And
That's great advice. I think that discipline is so important, and it's funny. I had a similar conversation, a similar webinar with George Kurtz from CrowdStrike, one of our advisors, and he had a story almost exactly like yours. A larger bank wanted on-prem and had to make you have to believe in where you're going and commit to it, and in the long run, despite the short-term incentives to go outside of your guardrails, it really is best for the company in the long run. And it sounds like you had some very similar experiences.
absolutely.
So you mentioned brands there, and we got a great question from the audience here from Matan about the Duo brand. I'm going to rephrase it a little bit. At what point did you as a leader really commit to investing in the Duo brand, and what did that look like?
Yeah, it was early. So even before really incorporated the company, I had a friend who was a startup kind of marketer, and I engaged him as a advisor. Later came in as a full-time employee, and is our creative director today. And he just rebranded Cisco Security, actually. But even from very early, I've had a strong belief. As a CEO, there are all kinds of different kinds of CEOs, right? You see a lot of sales CEOs. You might sometimes see a marketing CEO, but more often you'll see either technical or more typically a sales-oriented CEO. For me, I think in SaaS, and again, I don't know how many founders on the call are actually doing SaaS startups, security startups, but I would encourage all of you to consider it, because it's the best business model I've ever seen for building reliable, steady, and predictable growth. But in SaaS, I believe that it's really product led. We're still in this third era of technology sales, where like maybe the first era of this way back in the 90s, whatever, is a bag carrying salesperson, right? The second era was really marketing driven, but I think this third era is really product led, right? Because in SaaS, the barrier is so low. If a customer wants to try a product, they can, and there's no switching costs, right? Well, I won't say no switching costs. There are some, but much less, right, than before. And so, the best products tend to win and be winner take all, right? In almost any category, you look at the leader and then the second player, and it's just like a huge chasm, right? And so, so for me, it's always been about product, culture, and brand. Product is really the value we deliver to customers. Culture is actually the value I deliver to my team, and brand is actually the external representation of those first two. And I had a bit of a bias here, but I remember I'm an old skateboarder, so I don't know if this analogy is going to resonate to anyone who's not a skateboarder. But there are a lot of like skateboard companies, and the ones that stand out are the ones that have built strong brands, who kind of represent something that people can attach emotion as well as trust, right? Like there's real value. There's real value in a brand, right? And understanding again what you're going to get in terms of quality, in terms of what it means, and also appealing to an emotional kind of sense, right? Of as a buyer, supporting an organization that aligns with your values, and that you trust, right? To therefore be a good partner to you, right, on your journey. And so early, we did focus on that. We got it wrong from the start. We started the company originally as SCIO Security, SCIO, which is Latin for I know, and it's the name of a neighboring township here in Michigan. But no one could spell it, remember it, or pronounce it. And so very quickly we figured out that Duo made a lot more sense and was a little more closely aligned to what we do, which is two-factor authentication. And so we became Duo Security very quickly with the help of this, creative consultant, advisor, and then now our creative director. But we made that investment early, and probably around 20 people, we had started to build a dedicated team there in marketing that was focused on actually primarily some of the brand and PR are some of the most highly leveraged marketing activities there are. Not that demand gen isn't great and all the rest, but you pay for it right? in most cases. I mean, there's some stuff you can do around content and on all that, but it takes a long time to build that SEO and all that. Brand and word of mouth is, in my opinion, some of the best way, right, to build a business. And so focusing on, like I said, reputation takes a lifetime to earn but can be, destroyed instantly. You have to figure out sort of a strategy around that brand and how you'll evolve that. And that's something we took very seriously. And it was useful not just for, our customer acquisition, but actually for our talent acquisition as well. And so we also turned that around into things like our employer branding. And, when I brought on another board member, Matt Kohler, first vice president of Facebook and later general manager of LinkedIn. But I remember him telling me early that, some of the most impactful HR leaders he ever worked with came from product management and probably came from product marketing. I was like, what are you talking about? What is sort of people management have to do with product marketing? He said, Doug, if you're building a company in hyper growth, and if you're building a really high value, high tech company, looking to attract some of the best leaders, you're selling those people into your organization as much as you're selling customers into your product, right? And so all the sort of framing and thinking of, well, how do I build a pipeline, right? Actually building a pipeline of recruits and all this stuff is the same thing as building a pipeline of prospects, right, into customers. And so a lot of that operational kind of rigor applied to in that topic, like brand is not some fuzzy thing where you're like, it's like blue pens or whatever. It's, although it can be, we have plenty of swag at Duo. It's sort of amazing how much, we make. But again, at the end of the day, it's still measured. And for us, one of the most important metrics that wrapped that up for us, that was probably our North Star, and still is today, was never kind of our top line revenue or all kind of none of that stuff. That all comes, those are lagging metrics, right? But the one that we were focused on really optimizing for was actually NPS, Net Promoter Score. A measure of, again, your supporters versus your detractors, ignoring your neutral. But for us, for 8 years running, Duo has an NPS score in the high 60s to low 70s, which is really kind of unheard of. Apple is like 66. Rackspace with their fanatical support is 55, and most companies struggle, right, to get beyond like 20s, 30s. And so it's something that we really took seriously, and it became the vision, actually, of the business, the vision of the company. Our mission was to democratize security by making it easy and effective. But our vision, if we were successful, was to be the most loved company in security. And that is a brand. That is a brand value statement, right, around, how we're perceived, how we're positioned in the market, and how customers think of us. So yeah, I think it's very important, and I would encourage folks to do that. Stand for something, right? More than just what technical product value you deliver.
Sounds like a pretty good objective in an OKR, actually, which you just said. And I do want to just emphasize, especially for our audience, so 20 people or less, so very early on in the company's life, focusing on brand, hiring, marketing, leveraging PR, in both for internal and external purposes. So for recruiting talent and keeping talent happy, as well as differentiating yourself in a really crowded marketplace. We at Wild Ventures ourselves invest a lot in marketing. My colleague Sharon is our CMO over in Israel. She helps our portfolio companies very, very early on a consistent basis. We just think it's so important, and it's meaningful, and you really got to differentiate, again, both internally and externally, in what is a very competitive market.
Yeah, because as a CEO, you're always selling. You're selling by storytelling, right? Like one of my hats is definitely as chief storyteller, and it was actually an introduction from Matt Kohler to one of his colleagues from Facebook, Karen Maroney. She used to run PR at Facebook, and before that, she ran or communications at Facebook. And before that, she ran a really famous PR firm in the Valley. But she had this model or framework called RIBS around messaging, right? That your story needs to be relevant, inevitable, believable, and simple, right? And if you think about that, it's true. You need a story for customers where, again, it's relevant to their interests. It feels like you're on the right side of history. It's going to happen, right? One way or another. Might as well be with you. It's believable. People believe that you're the organization that can do that, and it's simple. That every person in your organization can explain what it is that you do and why and how. And it's it sounds simple and easy to do. It's hard. It's hard when you're a small business trying to figure out what you should be doing, what you represent, and how you should be operating. But that's really the work as a CEO, to figure out and start to build and construct that framework for your business, because that's the scaffolding that will allow that's a human scaffolding, right, for an organization to be able to scale.
Thank you. And you said something a little bit ago, something along the lines of the best product usually wins. But we often do hear that sometimes the best technology doesn't. And so what I'd love for you to do is give our audience some advice, and for founders that maybe have great domain expertise in cybersecurity, very technically competent, even outstanding, but maybe lack some of that go-to-market experience that you now have. What advice would you give to them as they start out these companies to make sure that what they're building, that great tech, is going to be paired with and supported by great go-to-market capabilities?
Yeah, so I've had a journey as a technical co-founder. If you look at for those of you who are technical, if you look at your SSH man page, you'll see me there as an author, right? So I'm an old crypto guy. I'm an old offensive and defensive hacker. I've spent a bunch of time. Nir Zook is an old from Palo Alto. I broke his products pretty badly when he's at Checkpoint. Resulted in found 11 ways through his Checkpoint Firewall 1, resulting in the complete rewrite of that, and him leaving to go start another company. So in security, we know, right? Technology is supreme, right? It's not that it's not important, but it's also not enough, right? It's necessary, but not sufficient in building a winning business, because technology also has to be deployed, managed, and used, right? In a market that's increasingly less technical, right? Security used to only sell to like banks, governments, hospitals, large enterprises, right, who had all the people to go deal with it. Increasingly, it's a much bigger market and opportunity as the internet has transformed every business, right? And so that's really the opportunity I see that's unmet in security, right? How do you make security something that every organization can achieve? And so, and for me, I think that as being primarily a design problem, right? Thinking about how you apply kind of design principles of design thinking to making security something that is not just applicable to networks, systems, applications, but to people, right? And so I'm thinking about that, the other side of that, from the product side over into the delivery and go to market is in how you sell, how you deliver that, because customers increasingly, they have different ideas about how they want to buy. And so, it's also a design problem to figure out, well, how do we build a customer experience, a sort of customer journey, right, into value with us, that can be successful even when they have maybe not even a clarity on what the problem is that they're trying to solve. So we see this all the time. Like in security, there are a lot of folks who are very nervous about what they should be doing because they see all the headlines, all this kind of thing, but they aren't deep technologists. They don't have any security people on their team. No one's security in their title. They never will. In my opinion, they never should. You know, a lot of small businesses, and not every small business out there, corner coffee shop, whatever, is going to have a CISO. And so we spent a lot of time thinking about how to engineer that journey. You know, how many folks were coming to us with only half an idea of what they were really trying to solve for. And so the way we figured that out was basically by engaging the market very directly, spending a lot of time talking to customers. Whenever people would sign up on the website on like a landing page for a fake product, not even a fake product, but like, hey, we're building this thing, and here's kind of what we're trying to do. If you're interested, sign up here to learn more. We'll let you know. Every person who did, we called them and asked them, so, why do you sign up? What else are you looking for? What else would you be considering? What problem are you trying? What problem does that solve in your business? And do you have any background in security? And how will you manage this technology? Like all this kind of stuff. But we did a lot of, in effect, customer research, right? To understand, what was driving sort of the interest, and then trying to figure out how we meet that emerging demand with a business that in some cases might have to, I wouldn't say reshape the market, but might have to, massage it a little bit, right? Sort of help people think about security differently. And so that's where, if you are kind of going about that, one of my pieces of advice, and it's something that's, I don't know if a lot of security entrepreneurs would agree with, but even today, 80% of my hires for Duo, which is a business now at Cisco operating at pretty significant scale, right? 800, plus people. 80% of our hires come from outside of our industry. They have no background in security at all.
Interesting.
Almost none of my sales folks have ever sold security before. They sold SaaS, and they have extreme discipline around, sales methodology, sales process, qualification, all that kind of thing. Do they understand security? Well, not before they got here. We had to explain to them what this stuff is, right? And how that works and what the value is. And we had to distill it into like a really simple kind of a book of Duo that outlined, right, our key differentiators, our value drivers, right? All those things, kind of top 10 qualifying questions to ask and all this kind of stuff, right? But, these were lessons I learned elsewhere, like from Barracuda, where, famously, the former CEO there, he would pull people from the gym, right, where he'd work out, into kind of a call center, right, like an inside sales pit, and they'd arm them with like, here's your top 10 questions, start calling. And just, and they built these systems around this stuff. But if you're an engineer, you sort of get systems and get numbers and get sort of hypotheses and tests, experiments and results. It's a lot of fun. And so what I suggest is don't be afraid of it. It's not some slimy thing. I'd say maybe the old school way of selling, which is all like relationship driven and all this kind of stuff, maybe. So I agree. I'm personally not the kind of person that is super excited to go take customers out on like a yacht, right? Or worse, I remember earlier businesses where you get some very, very questionable sort of expense reports, or people coming back from some unseemly kind of places, or expenses are very questionable. I don't really truck with that. I don't agree with any of that kind of sales methodology or process. I don't think it's necessary. I don't think it's effective anymore. I think what's most effective is, again, what's really shifted to more of a longer term buying consideration that customers are doing around technology, where they're learning online as they go. They're valuing lots of things. They try before they buy. They're reading reviews from other peers. Again, it's technology sales has come a long way from what it used to be, and a lot of it really is a machine, right? It's constructing the machine against how what customers want in terms of that journey. And if you're an engineer, you can engineer and build that too. And so that's my suggestion to folks, is not to be afraid of it, but to really lean into that and put as much time and focus on that side of building a business as your product.
And so what I'm hearing is, being programmatic, being systemic about it, being customer centric, and that doesn't just mean for the Fortune 10 or for high growth unicorns. It means for the broad market, and understanding, in some cases, educating, and then of course serving. Getting back to your point about NPS, serving that customer base. And so it's, again, customer, so important for early stage startups, regardless of what's happening inside that black box or on the back end.
Yeah, and one way you can solve for that also culturally as you scale, because for a business that is doubling or tripling revenue most years like we did, or and doubling the team, right? Every 6 months you look around and half the team is new. You have to have some like, you know, organizational principles that allow you to move forward when you're not going to be the person making all the decisions. You can't be, right? It won't work. It won't scale that way. And so we did push decision making down in the organization, and we had a simple rubric around how people were expected to make decisions. Right? Is it right for the customer? Is it right for our company? And is it right for the community? If those things align, go do it, and you come back and tell us what happened. Um, we in most cases, right, in most teams, we'd have decisions to make where we'd have only 60% agreement, but it had 100% commitment. Right? It's that person's decision. They'll make it however we need to, but we're all going to support that person, right, to see that through, and we're going to learn something from what we've done. I still am typically the dumbest person in the room in most of these kinds of decisions with my team, and the only things that ever come to me and should, right, are the decisions that are really irreversible. Things where again it comes at such a cost to the organization to get wrong that the buck has to stop somewhere, and it stops with me on those things. But for most other things, the job of every employee at Duo is to make decisions on behalf of our organization to drive the business forward. And so that's with those kinds of frameworks and so forth, you can make sure that everyone is able to solve for things together. And you have the culture where they're learning from each other, and information is not a currency or things like that you see in some really high dysfunctional organizations. People hoarding information or claiming credit where they shouldn't, all that kind of stuff. That's was nonsense. Then you have a team that's all getting better together, and that's how you grow.
I want to shift gears a little bit towards the growth side of the story, especially being cognizant of time. So, you mentioned 10 million in revenue earlier is a nice target for companies, and sometimes people can almost scrap their way to that level of revenue. And I'm going to give you a wide range here, but on your path from 10 to let's say to 100 million in revenue, can you point to one or two key decisions that you made that really benefited Duo and that really helped you as you scaled and kind of in what I would say is scaled incredibly quickly?
Yeah, probably the biggest one was making sure that we had up to that point, up to 10 million in ARR, we were clear on what we were trying to figure out for the company, which was that repeatable motion, right? And so by the time that we got to 10, we knew what that looked like, right? It was, less than 30K ARR, or sorry, ASPs. Our average sales price was actually really small. We were doing a lot of small deals. It was primarily SMB mid-market, and in fact, we sort of started in SMB, got pulled quickly to mid-market, and had started to close some large enterprise deals, but also high velocity, right? It was literally under 30-day sales cycle for SMB, which is largely self-service. It was under 45 days for mid-market even. And so probably the most impactful decision we made at that scale, because we went from 1 million to 3 million to 10 million. At 10 million, I was like, okay, if we're going to triple again, it's pretty hard, right, to do that sort of without a lot more infrastructure and so forth. But we knew what was working, and with that kind of outline of our business operating model, we went out looking for the go-to-market leadership team that we need. And I knew that we would have to work together, right? I wasn't going to necessarily hire, all this piecemeal. I tried on some of that previously, right? On marketing, sales, and so forth. But we ended up hiring, in effect, kind of the Zendesk go-to-market team. Zendesk was one of the few companies we saw out there that had a similar model, not in security at all. In fact, we couldn't find any companies in security that looked like us. And so, so I talked to those folks, and we ended up bringing on board my head of sales, my head of marketing. They're still here, right? Hundreds of millions, in AR later, they're still here with us. And I hired a head of CX from Google, who was not a CX person, right? She was a global sales operations person at Google, but had also done information systems at GM. And so it was really kind of that was probably the most impactful decision we we made was to hire the right leaders for that stage of the business to take it from startup to growth mode, right? And then ultimately to scale. And make sure that we also built against that a CS program, because at the end of the day, for a company that for instance, maybe you're growing less quickly, maybe doubling the team, doubling your business every year. Well, your new business, right? Even half of that might come from your existing customers, right? And so 75% of your revenue is actually going to be in the hands of your customer success folks, right? Protecting that and making sure they grow that, not your sales folks who are going to be focused in a SaaS model on new customer acquisition, new ACV. And so the investment we made in CS was very important, right? In year 3 or 4 of the company. And again, that's what's paid tremendous dividends for us, because we've enjoyed sort of single digit churn rates, right? Because in SaaS, the wonderful thing is you acquire those customers, and as long as you treat them well, you earn it every day, and they don't leave you, every new deal just compounds, and you get that sort of nice effect, right, of exponential growth. But you have to have that in place. So making sure that we invested early in CS, and making sure again that we built the right customer acquisition model based on the success we were having and doubling down on that. Those are the most important things. And then probably the other decision I'd say was probably most important was the one I mentioned earlier, where with Stratton's help we heard him out and agreed to stay on the right side of history and not go after some other license model or on-prem software or anything. Just stay pure SaaS. That made all the difference.
Great, thank you. And the last question, I think you'll kind of have to do it in lightning round fashion, because we only have a couple of minutes here. But you put yourself in the great position to make a decision between going to the public markets and being acquired. And I'd love to just hear kind of the factors that should go into that decision, and maybe put price aside, because that's the obvious one. How did you think about that, and how should others be thinking about that as they hopefully get to your position?
Yeah, a couple things. One is they're look, especially if you take venture money, and I'm guessing that most of you all have, and it's not a slight to venture investors at all, but venture capital investors are investing in exits, right? Not companies for their own sake, right? It's the great people to have as partners, great on your board and all the rest, but they have a business model too, and it's really important that you understand theirs, what they're trying to achieve, and all this, and that you're building towards something successful together. Now, for us, the decision on IPO versus acquisition, it gets hard beyond a certain point to actually be acquired, because the market for buyers transacting at a certain level, there's sort of this chasm, right? It's small deals, deals up to like maybe a couple $100 million, are pretty typical. And then there's this weird chasm, right, before you get into like the $1 billion plus opportunities, right? But you don't see a lot of companies sort of transacting in sort of the I don't know, $500 million to $1 billion kind of range. They're a little tricky that way. And anyway, and for reasons I won't explain to you, if you do end up spending any time thinking about this kind of stuff, I encourage you to get a banker, right? Bankers, job is to figure this stuff out and to present you a view of market. But for us, it was pretty straightforward. We had a mission, right, in building this company. So beyond kind of valuation, which is sort of obvious, but it is important to think about that in terms of your own valuation trajectory, what you can do on your own versus what, whether you get credit for what you're doing. And in our case, we did. But also the mission and the culture, right? Because if you do end up being acquired, you're marrying, right, to an organization, just like you're marrying to investors, maybe, for a very long time. Marty, my friend Marty Resch at SourceFire was at Cisco for 7 years, post acquisition. It's a wonderful run, right? Great journey to do something transformative, and that was what was interesting to us, right? The opportunity to do more than be successful in our patch, in our category, and drive, kind of continue to stay up and to the right in our Magic Quadrant. What could we do to transform the industry? And Cisco was a company that was in the throes of that sort of transformation, just like Microsoft had been 5 years ago. And so that to us was much more exciting and interesting. And the thesis, the investment thesis for Cisco on Duo's acquisition was also around SaaS acceleration. And today, almost 3 years later, we can look back and see all the things that we have done, all the leaders that we've had in place. Like my old security leader is now the CISO for Cisco. I have a lot of folks that have actually leveled up in that way and have had direct and very broad impact on a much larger business, right? 75,000 people, $50 billion, right? Kind of, it's a very interesting way to quickly achieve that scale and operate at a different level. That for us was very exciting, right? Because how many opportunities do you get to do that, right? And sort of be at the ground floor of the transformation of a major tech sort of titan in the industry. So that was it for us. But I think for every founder, the one thing I would say is it's deeply personal. It comes down to you, your co-founders, and how to think about that. Your board members should be looking to you for that answer, right? They'll have their ideas and opinions if you ask for them, or even if you don't. But I think ultimately it comes down to you as a founder and as a leader, CEO particularly, as to, again, whether you think your management team, what you think your management team that you folks you've worked with forever, and how they'll best be served, right, in terms of what you do next, and how your customers will be best served, right? And for us, the thing I didn't want to do, because I see it today with other companies that did go public right in the time that we would have 2 years ago, and are still sitting at $2.5 billion market cap 3 years later. That was a journey I did not want to be on. Where we go out, we were successful IPO, all this kind of thing, and we end up, and certainly there are plenty of companies in security that are doing like crazy, like 10x multiples, right, of the revenue as a current valuation. But how many are there, right? And ultimately, is that the right thing for the industry? I think it's really important that a company like Cisco can be a leading buyer, right, in the market in security, because security is a very different kind of industry where there's a lot of innovation, consolidation, and that there's a natural cycle, right, to that kind of technology evolution. And there are fewer and fewer. They're like McAfee, NAI, Symantec, like these companies that used to be the major acquirers aren't there anymore, or they are different now. Cisco still is and has acquired hundreds of companies. And so for me, it was also an interesting opportunity to be on the other side of that, right? And sort of reshape the industry in security around how Cisco might operate. So it's a long answer. Well, sorry, that wasn't exactly like.
No, that's great, and congratulations on what was a great story, a phenomenal outcome, and what sounds like is a continuous journey beyond where even you exited. So I think that's phenomenal. On behalf of Wild Ventures, on behalf of Icon, GGV, Doug, I want to sincerely thank you for your time today. I think this was incredibly helpful for our community here. If anyone in the audience has questions about what you heard or any kind of feedback for us, I'm easy to find on LinkedIn, John Brennan at Wild Ventures, or john@wildventures.com. Doug, thank you so much for spending some time with us today.
Thank you. I appreciate it. Good luck, everybody.